Financial forecasting tools versus accounting dashboards, which one is better for strategic planning? Most finance teams get this wrong by assuming that simply looking at past numbers is enough to guide future strategy. The surprising truth is that financial forecasting tool and accounting dashboards serve very different purposes, and understanding the distinction can transform strategic planning. Accounting dashboards like QuickBooks, Xero, or Sage focus on providing a real-time snapshot of your financial health. They display key metrics such as cash flow, revenue, expenses, and profitability. For example, a CFO can quickly see that last month's operating costs exceeded projections and adjust budgets accordingly. Dashboards excel at tracking performance, spotting anomalies, and keeping stakeholders informed about the current financial position. Financial forecasting tools, such as Adaptive Insights, Planful, or Noplin, go a step further by projecting future performance based on historical trends, assumptions, and scenario modeling. They allow finance teams to run what-if analyses, predict revenue under different market conditions, and plan for growth or potential downturns. For instance, a retail company can forecast sales for the next quarter under 3 different marketing investment scenarios, helping leadership make informed decisions. Forecasting tools are designed for forward-looking insights rather than just reporting what already happened. The key difference is backward-looking versus forward-looking. Accounting dashboards help you understand where you are now, while financial forecasting tools show where you could be in the future. Most companies benefit from using both. Dashboards provide clarity and control over current finances, while forecasting tools guide strategic decisions and resource allocation. The takeaway is clear: if your goal is monitoring day-to-day financial performance, accounting dashboards are essential. If your goal is planning strategically, anticipating market changes, and preparing for growth, financial forecasting tools are the better choice. The surprising truth is that combining both gives finance leaders a full picture, real-time insight plus predictive power, enabling smarter, data-driven decisions that drive long-term success.